Hello, this is Sunko, the Korean bro. Today is 2022, July 1st. Okay, let's look at the articles tonight. What do we have? Okay, if you've seen my channel before, you know what I'm going to look at. I'm gonna go to Yahoo Finance first, and then next one that I'm gonna look at is MarketB.com. Okay, let's see. Do we have downward trend tonight? Okay, Zim integrated shipping services. Don't miss this dividend. Okay, what dividend do we have? Zim integrated shipping services. Don't miss this dividend. RH gives good reason to get defensive. Europe rises, Asia falls after pessimistic tanking survey. Coal sales falls apart in shaky retail environment. New Zealand later makes first trip to UK since trade deal. Inflation hits record 8.6% for 19 countries using the euro. Guidewire software stock is set to rebound. Insiders are loading up on industry pullbacks. While Rio Tinto Group is an undervalued opportunity. And what else do we have? The most upgraded stocks to buy before the second half starts. How to profit in the bear market. Nvidia shares looking for a bottom. What makes QuantumScape an interesting stock peak? Um, okay, these are enough. What else do we have in Yahoo Finance? Stock futures fall as July begins with more selling. Why Goldman is still very cautious on the stock market. Supply chain issues ease significantly and inflation could be next. We are in a recession, long time bull. Kathy Wood warns investors about the big problem in the economy. We're in a recession. Here's what she likes today. Too strong buy stocks are too cheap to ignore. A recession theory crashes 13 major stocks below $4 a share. Hmm. Warren Buffett says these are the best stocks. Oh, when inflation spikes, with consumer prices still raging, it's time to follow his lead. The S&P 500 had its worst first half since 1970. What comes next? Wells Fargo, here's the best asset to own when inflation strikes. Here's how America's millionaires are positioning themselves for recession. If you are doing something different, you might set up for a second half of 2022. Begins with these 13 stock picks. Buffett braces for recession shock after worst rout in the 52 years. Here's how far oil could fall in recession, judging by past experiences. Tech stocks are having their worst year ever. Here's what history says happened next morning, brief. Sell ExxonMobil and other energy stocks before these headwinds hit prices once again. The cheap boom likely over. As Marco said, it's in a downturn. Okay. Economists white stock poised for 50% wipeout. City lowered its S&P 500 target. That doesn't mean to avoid buying stocks. Goldman strategies warn risk of stock sell-off is still high. Why it seems that all of your trusty stock market indicators are busted. A stock market sells off as economic data rolls in. These major stocks off sharply. The 5 worst performing stocks in the S&P 500 this quarter. AMD is the cheap stock to buy for recession, says analyst. Micron stocks falls after chipmaker delivers dismal outlook. The optimist guide to the second half of 2022 hinges on oil prices. Latest inflation data is good news for the Fed. Warren Buffett stocks Meta, Google among 25 names on the screen. 6 stocks immediately turned $10,000 to $53,492 in 6 months. Okay, it's enough. Too much. Too much read. While Goldman is still very cautious in the stock market, the market's challenges may persist, prompting Goldman Sachs to stay cautious on recommending stocks, even though they are at far cheaper levels than 6 months ago. And they also think that there's another downward trend. Okay, until the growth mix improves, volatility is likely to linger as investors are shifting between inflation frustration and recession obsession. Goldman Sachs strategies Christian Mueller Glissman wrote in a new note to clients, adding that Goldman is positioned defensively for the next 3 months until macroeconomic conditions show sign of improving. Near-term equity drawdown risk remains elevated as equities are pricing only a mild recession. Much of the valuation de-rating year to date has been due to higher rates and inflation. Uh, Mueller Glissman added, unless bond yields start to decline and buffer rising due to recession fears, equity valuations could decline further. In addition, earnings revisions are likely to turn negative in the second half. Okay, even the experts and the people who work at Goldman are really defensive in terms of investing at this point. They still think there's another downward trend. Supply chain pressures have eased significantly, and inflation could be next morning, Griff. On Thursday, we learned the Fed's preferred inflation measure, core PCE, moderated in May, rising 4.7% over the prior month. Fed's preferred inflation measure, core PCE, moderated in May, rising 4.7% over the prior month and marking the third strategy's month of moderating price pressures. And while investors will be closely watching for signs of this trend continuing or reversing in the coming months, the much Malian global supply chain is beginning to show some signs of operating more smoothly. One of the most intuitive measures of supply chain health is supplier delivery times, which hit their longest points on record last fall. Okay, supply chain pressures have eased significantly. Inflation could be next. Okay, supply chain could possibly continue and it could be eased, but then inflation issue will still linger. That's the point of this article, I guess. One of the most intuitive measures of supply chain health is supplier delivery times, which hit the longest points on record last fall. Earlier in June, we learned manufacturers' delivery times in the New York Fed and Philadelphia's Fed regions had gotten significantly shorter during the month. Since then, we've learned from the Kansas City Fed and Richmond Fed that delivery times also improved in their regions. However, delivery times got worse. In the Dallas Fed region, has a composite index consisting of delivery times and order backlogs, another good proxy for supply chain delays. The question is whether the drops in regional index is tracking in the field. Anyway, okay, blah blah blah. Point is, things are getting better, and inflation, no, not inflation, but supply chain pressures have eased significantly. Okay, we're in a recession. Longtime bull Kathy Wood warns investors about the big problem in the economy. Here's what she likes today. The official GDP estimate for quarter two won't be available until later next month. Hmm. But many experts, including Art Invest Kathy Wood, are calling for a recession. We think we're in a recession, Wood says in a recent CNBC interview. We think a big problem out there is inventories, the increase of which I've never seen this large in my career. I've been around for 45 years. Hmm. Based on how markets are doing, sentiment is certainly bearish. The S&P 500 is down 20% year to date. Wood's flash fund or innovation ETF tumbled by more than 50% during the same period. But investors are not giving up. CNBC noted the fact said data showing that ARK saw over $180 million in inflows in June. I think the inflows are happening because our clients have been diversifying away from broad-based benchmarks like Nasdaq 100 says would. We're dedicated completely to disruptive innovation. Innovation solves problems, you know. For those who share Wood's vision, here's a look at the top three holdings of ARK. Um, Zoom Video, and Tesla, and Roku. Uh, uh, Too strong buy stocks are too cheap to ignore. A Z company, okay. Sliding products, a Z company. Investors can find the benefits of cheap stocks, which offer both learning opportunities and strong upside potential. However, in evaluating stocks to buy, it is important to look at more than just the price. Wall Street and analysts are taking note and are looking for the strong buys among the market cheapest stocks. Some of their picks make interesting reading, and we've opened up the database the team ranks to pull up the details on two of these stocks. Let's take a closer look. Cars.com. Now we'll switch gears to Cars.com, one of the tech world's truly durable names. This company got its start in 1998 as part of the late 90s dot-com bubble. It survived a crash that followed when the bubble burst. Cars.com, which has since emerged as one of the leaders in the online automotive digital marketplace, gives car buyers resources, data, and there's the tools they need to navigate the car dealers and find the right vehicle at the right place. Cars.com boasts a $692 million market cap today, along with more than $620 million in annual revenues, $189 million in annual adjusted income. The Cars.com website had 592 million visits last year, 25 million monthly active users, and the company's network included over 19,000 auto dealers. Cars.com in its most recent quarter, first 22 showed top line sales of $158.2 million. And not with last six quarterly results, EPS slipped by 25% year over year from 8 cents to 6 cents. Hmm. Okay, let's look at the price of cars.com. Cars. Okay. Warren Buffett says these are the best stocks to own when inflation spikes. With consumer prices still rising, it's time to follow this his lead. Okay, what does he do? Price levels continue to rise at a rate when we haven't seen in decades. Okay, in May, U.S. Consumer prices surged 8.6% from a year ago, the biggest increase since December 1981. Spike inflation has severe consequences for your cash savings. Fortunately, investing legend Warren Buffett has plenty of advice on what to own when consumer prices spike. In a 1981 letter to shareholders, Buffett highlighted two businesses traits the investor should look for when trying to fight inflation. The power to increase prices easily and the ability to take on more business without having to spend excessively. Oh. The power to increase prices easily and the ability to take on more business without having to spend excessively. Okay, there are hints. So the company that dominates the market, because if company has that much power, it's easy for that company to raise a price, right? The power to increase prices easily because it dominates. The ability to take on more business without having to spend excessively, without having to spend much money. Coca-Cola mm, has the ability to take on more business. I mean, it's already too big and it's got so much potential, but then it doesn't do it. Oh, it doesn't spend that much money because people keeps buying it, right? American Express and we have Coca-Cola is a classic example of recession-resistant business. Whether the economy is booming or struggling, a can of Coke is affordable to most people. The company's entrenched market position, massive scale, and portfolio of iconic brands, including names like Sprite, Fresca, Dasani, and Smart Water, give it plenty of pricing power. As solid geographic diversification, its products are sold in more than 200 countries and territories around the globe. It's clear that Coca Cola can thrive through thick and thin. After the company went public more than 100 years ago, Buffett has had Coca Cola in his portfolio since the late 80s. Today, Berkshire owns 400 million shares of the company worth approximately $25.1 billion. Apple, Chevron. Hmm. Here's how American millionaires are positioning themselves for a recession. If you're doing something different, you might want to think twice. Okay, what do they do? Let's see. Here's how American millionaires are positioning themselves for a recession. How do millionaires position themselves for a recession? Okay, with the U.S. economy showing some signs of stalling, talk of recession is heating up. Okay, Um, but it's not just average Americans who are fretting about what that might mean for their finances. Hmm. Even those with at least seven figures in their bank accounts are concerned, according to CNBC's Millionaire survey. The group surveyed the millionaires own roughly 90% of individually held stocks in the U.S. Said they see inflation as the number one risk to both the economy and their personal wealth. So, what are they doing about it? Here's more on how some of the country's wealthiest individuals are preparing for a potential recession this year and how you can use the same strategies to weather tough times. There's more on how some of the country's wealthiest individuals are preparing for a potential recession this year. Hmm. Mostly nothing for now. Sometimes the hardest thing to do is nothing, but when the market bottoms out, knee-jerk reactions like immediately selling off investments are often the worst thing you can do. Okay, like immediately selling off investments are often the worst thing you can do. So basically, I invested much of money into stock market, and based on this article, it's better for me to just do nothing instead of selling stocks that I own. I just do nothing and ignore, right? Mm. Mixing it up when necessary. While most people should hold tight for a beat, some investors, especially those who focus heavily on growth stocks, may want to consider switching up their investment mix. Mm. Nearly 40% of the millionaires surveyed told CNBC they plan to or have already made changes to their portfolio due to inflation. About one third say they've dumped equities thanks to inflation's effects on certain sectors and stocks. Okay, keeping cash handy. Okay, as we said, here's the thing: do nothing, or if you have it, don't sell it, and mix it up with something else and keep cash handy. That's the point. You don't really want to be selling when the market is tanking. Okay, pulling money out of the portfolio for emergency or for retirement funds locks in those losses. If it's possible, set aside more money in cash, as 44% of the millionaires say they're doing these days. Homeowners can lean on the equity in their homes through a home equity line of credit. Um, The best option will be a high interest savings account where your cash can be handy, but will also continue to grow on its own. Buffett says brace for recession, shock after worst rally in 52 years. Brace for recession shock after worst route in 52 years. Okay, it's really negative. A recession shock begins for markets following the worst first half for the S&P 500 in more than 50 years. Bank of America Corp shift investment strategy market hardness says. While expectations of aggressive rate hikes by the Federal Reserve are peaking, inflation expectations are not. A Buffett bullish and bear indicator remains a maximum bearish for a third week in a row. Hard road, both stocks and bonds were rocked by outflows this week as investors fear the global economy could concentrate amid runaway inflation and hawkish central banks. About $5.8 billion active global stock funds in the week through June 29, although U.S. equities saw small inflows of about $0.5 billion, Buffett said. Um, Markets have been rolled this year as investors dumped risk assets on worries of a looming recession, while inflation remains sticky, even as central banks kick off aggressive rate hikes. Another big recession is coming. Here's how I thought oil could fall in a recession, judging by past experiences. Okay, end of article. I cannot read it. Tech stocks are having their worst year ever. Here's what history says happened next morning. Brief. The Nasdaq and Russell 2000 are having their worst year ever. The Dow Jones Industrial Average is off to its worst start since 1962, and you would have to travel back to 1970 for a worst first and second quarter in the S&P 500. Investors wondering what happens the rest of the year. And when markets are down, big through June, one found much comfort in mixed data, nor much comfort in defining that all roads for stock investors tend to lead back to the Federal Reserve. Let's start with Nasdaq, which is down a record 29% so far this year. It has lost 10% in the first half of the year, 8 times. Okay. Looking at the table below, the average return in the second half was lost over 5.8%. If we take the Fed at its word, that the central bank is singularly dedicated to fighting inflation, we shouldn't expect Powell and Co. to deliver relief to investors anytime soon. But if the Fed does pivot, as markets are eventually pricing in for 2023, we could see an echo bubble down the road. Okay. Whatever. So Oxymobil and other energy stocks before these headwinds hit price once again. Uh what headwinds could possibly hit prices once again? Okay, end of article. The cheap boom likely over as Marker says it's in a downturn. Chipmaker gives down bid forecast as many fear. The question now is how long will this slump last? Why it seems that all your trusty stock market indicators are busted? Okay. Frustrated investors believe that nothing works. The worst thing that you can do is sell off the stocks that you own, but just keep it and ignore it. Stock market sells off. As economic data erosion, this major stocks off sharply. Okay. The Dow Jones Industrial Average fell more than 2% as stock market came under another wave of challenge following inflation and economic data. S&P 500 is having its worst first 6 months of the year since 1970, and it's the worst 6 months ever for some other indexes. Mm. United Airlines tumbled more than 4% in heavy trading, dropping near 52-week lows. The airlines reached a tentative agreement on the wage hike for its pilots as United and other carriers struggle with staffing shortages. AMD is a cheap stock to buy for recession, says analyst. Uh, Shares now offer a great buying opportunity even if the economy falls into recession, according to Northland Capital Markets. On Thursday, analyst Gus Richard raised his rating for advanced micro devices stock to outperform from market performance, though he reduced his target for the price to $95 from $97. Hmm. We scrubbed our AMD numbers and lowered our CY23 estimates to comprehend a global economic slowdown. AMD in-server CPUs is at the top of the stack next year. We believe AMD will see little impact on this business. A bunch of micro devices. Mm. Okay, Micron stock falls after chipmaker delivers dismal outlook. Micron. Memory chipmaker Micron Technology. Late Thursday beat Wall Street's earnings target for its first third quarter and matched views on sales. However, it badly missed estimates with its guidance for the current quarter. MU stock fell in extended trading. The Boise, Idaho-based company earned an adjusted $2.59 a share on sale of $8.64 billion in the quarter ended June 2nd. Recently, the industry demand environment has weakened, and we are taking action to moderate our supply growth in fiscal 2023. MU stock has subpar composite rating. Okay, next one, six stocks. Okay, this is the one that I'm really interested in. Okay, let's take a closer look at it. If you're not feeling great about your S&P 500 portfolio over the past 6 months, join the club before. Some lucky investors will found ways to make money. All told, had you invested $10,000 in January and reinvested your money into the top stock currently at the S&P 500 each month this year, including dollar January and June. It would have says an Investor Business Daily announces data from S&P. While these six stocks jumped, the S&P 500 squarely in a bear market, and a big chunk of that 20% year-to-date loss. Dollar General. What else do we have? The only one we have is Dollar General in this case. Dollar General. Twitter, Nielsen Holdings, Solar Edge, Hell Button. Zing Integrated Shipping Services, don't miss this dividend. Provides investors with a strong dividend in the shipping industry. The company's policy is to pay out 20% of its net income each quarter, 30% to 50% of its net income on an annual basis. Zim's last annual dividend came in at $11.4 with a yield of 24%. Zim's dividend, along with its low P/E ratio of 0.99, makes it tempting to add to one's portfolio, especially if diversifying into another industry is seen as desirable. Is one of the smaller players in the shipping industry and operate in areas from Asia to the east coast of the United States and throughout the Asian continent itself. The company is headquartered in Israel. Something note about the company's dividend is that it can be considered safe and sustainable. Zim has plenty of cash on its balance sheet to pay out investors, which currently stands at $779 million. So even in the case of a downturn, investors can feel confident that their dividends will be paid out. Another factor that makes Zim attractive is its impressive quarterly results. Business in the shipping industry across the board has been booming due to an increase in shipping rate charges, primarily caused by the congestion of the supply chain. For Zim, the company boosted its revenues by 113%, while its operating income grew by 60% too. The booming revenue growth for Zim will likely slow down as long as that the world economy is about to enter into recession, continue to mount. Shipping industry, okay. RH gives good reason to get defensive. RH was one of the biggest winners from the pandemic boom, and now it is one of the biggest losers of the pandemic bust. And more importantly, because of when it reports in the reporting cycle, it has provided insight into the upcoming quarter and what to expect from our guidance among S&P 500 companies. The company shocked the market with its earnings report just a month or so ago, not because it missed expectations, but because it lowered its outlook on softening demand trends, loss of market share, and other near-term headwinds to growth. Now the company has lowered its outlook yet again, and we think this is a trend that will be echoed across the consumer discretionary space, given the fact that the consumer discretionary sector is expected to post a robust rebound later this year and next year. We don't think this is a good news for the market at all, not want to be. Europe rises, Asia falls after pessimistic Tenkan survey. European shares edged higher after Asian benchmarks finished lower Friday as a quarterly report by Japan's central bank rekindled worries about the world's third largest economy. Shares were slightly higher in Europe in early trading after finishing lower in Asia, declining in Tokyo, Seoul, Sydney, and Shanghai. Markets were closed in Hong Kong for a holiday. Oil prices fluctuated throughout the day. Okay, whatever. 7 risk of stocks to buy as inflation remains at record levels. Wholesale falls apart. In shaky retail environment, okay, the potential sale of the Kohl's department store chain has fallen apart in a shaky retail environment of rising inflation and consumers' anxiety. Kohl's entered exclusive talks early this month with Franchise Group, the owner of Vitamin Shop and other retail outlets, on a deal worth about $8 billion or $60 per share. Given the environment and market volatility, the board determined that it simply was not prudent to continue pursuing a deal, said Kohl's chairman Pete Bompath. It was the second time this week that a major retailer retreated retreated from a potential sale. Walgreens said Thursday it was giving up on its plans to sell its boats business in the UK. Call's decision to terminate acquisition talks with franchise group comes as no great surprise, said Nell Saunders, managing director of Global Data. Current market conditions are not conducive to corporate deal making. With issues around financing, raising debt, and capital are all acting as barriers to a closure. Saunders said that while Franchise Group was serious about the BD, it likely found it increasingly difficult to make the math stack up against the backdrop of a deteriorating retail environment. Inflation hits record 8.6% for 19 countries using the euro. Inflation in countries using the euro set another eye-watering record that pushed higher by a huge increase in energy costs, fueled partly by Russia's war in Ukraine. Annual inflation in the eurozone's 19 countries hit 8.6% in June, surging past the 8.1% recorded in May, according to the latest numbers published Friday by the European Union Statistics Agency. Eurostat inflation is at its highest level since record keeping for euro began in 1997. Energy prices rocketed 41.9%, and prices for food, alcohol, and tobacco were up 8.9%, both faster than the increases recorded the previous month. Demand for energy has risen uh, as the global economy bounced back from the death of the COVID-19 pandemic, and Russia's invasion of Ukraine made things worse. European Union leaders agreed to ban most Russian oil imports by the year's end, driving a price spike. The 27-nation bloc wants to punish Moscow and reduce its reliance on Russian energy. But it's also adding to financial pain for people and businesses as utility bills and prices at the pump soar. Okay, next one. Guidewire software stock is set to rebound. Okay, what is it? Software provider to property casualty insurer Guidewire GWRE Guidewire software has plunged 31% in this year, but is staging a comeback with the launch of its first Guidewire cloud offering known as Elysian. Guidewire provides mission-critical essential software systems to the $2.5 trillion global property and casualty insurance industry with many non-discretionary products that help keep it resilient during economic uncertainty. The company continued to see momentum in its subscription model and strong interest in its cloud platform with new and existing insurer clients worldwide. Uh, Insiders are loading up on these three pullbacks. GMS and Viva stock. Occidental Petroleum Why Rio Tinto Group is an undervalued opportunity. Is in the business of mining and processing commodities across the world, but perhaps the most important material it delivers is an iron ore. Rio Tinto Group. Rio has the largest portfolio of iron ore assets with 16 mines. The demand for this raw material is set to grow worldwide at a CAGR of 3.7% between 2022 to reach 2.7 billion metric tons. Shares of Rio have fallen low enough that the company can be considered undervalued. The company is currently trading 39% below the market consensus price target with a low P/E ratio relative to its historical levels and that of its peer companies in the metal and mining industries. The most upgrade stocks to buy before the second half starts. Follow the upgrade to second half stock market winners. A single upgrade is rarely enough to move a stock price very much, but a series of upgrades often are. That's why we like to screen up the most upgraded stocks. And what we found today is interesting. Alice Bargain Outlet, FedEx, and Davon Energy are the three most upgraded stocks in June 2022. They're all set up for gains in the second half. While none share the same industry or even sector, they all are benefiting from secular trends. The point is success, not just in the second, but on into 2023 and beyond. Hmm. How to profit in the bear market? Nvidia shares looking for a bottom. Shares of Nvidia Corporation slipped a little this week during an all-around poor stock market session. Both the S&P 500 index and Dow Jones Industrial Average to a slight hit, falling 0.13 and 0.15% respectively. The stumble captured two-day upward streak, closing just short of 52-week high. What makes QuantumShape an interesting stock pick is an undeniably story stock that's being sold to investors. The story is that the company's production of innovative solid-state batteries will be used by its partner companies like Volkswagen and others due to the batteries' faster charging times and greater energy capacities. Furthermore, QH claims to have developed the industry's first anode-less batteries, which deliver high energy density and performance compared to its competitors' batteries. The company is riding on the super cycles of green energy and a transition to electric vehicles, but some investors aren't so sure. Hmm. What the bears say, what the bulls say, the bottom line. Perceived risk to the reward ratio of the stock combined with its progress in realizing its resplendent ambition might be a convincing story, provided that the price is right. Given that the broader market is moving to increasingly uneven territory with threats of a looming recession ahead, opportunity to buy stocks like QS are likely to be down zone. Okay, enough looking through some of the articles, and what I'm gonna do is uh looking into more of stocks that are on AMD stock approaches key support amid falls to new lows. How report vast benefits under income taxes. Fries and energy drinks are the best performing stocks in the S&P 500 this quarter. Wells Fargo here's best asset to own when inflation strikes. Wells Fargo. My current stock is sliding. The Allo is disappointed. Palo Alto Networks is almost profitable. Its stock is too cheap, Morgan Stanley says. Palo Alto. We got Fortnite. 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 Is AV stock about as Humira biosimilar rivals loom? Is AV stock a buy? Fortnite. I'm going to consider buying some Fortnite. It looks like a good company. Okay, AV stock has fallen off its early April high after the big pharma stock will announce the departure of President and Vice Chairman Michael Severino. After 8 years and headed to flagship pioneering the biotech creator behind Moderna, leading pharma stock. Fries and energy drink, here are the best performing stocks in S&P 500 this quarter. In what has been a brutal quarter for stock market, shares of a French fries producer, a telecom giant, and an energy drinks maker bucked the trend. French fries producer, a telecom giant, and an energy drinks has fallen 60% from April 1st to June 30 as inflation reached its highest level in 4 decades. And the Federal Reserve hiked interest rates in an attempt to cool the short price increases. The Fed's aggressive monetary policy, many on Wall Street believe could lead to the US to recession. Here's the best asset to own when inflation strikes. Wells Fargo, and what are the right and wrong assets to own during the inflationary times? As we're saying now, Wells Fargo looked at 50 major asset classes and calculated which one did the best and worst during inflationary period since 2000. If you want to If you want to know what to own during inflation, knows one word: oil. Wells Fargo found the price of oil to jump more than 40% during inflationary period since 2000. It surely tops the 10% inflation period gain of U.S. large stocks like the S&P 500. Oil's inflation times rises also more than any other major asset class the bank looked at. Oil's gain during inflationary periods is also roughly 3 times higher than the average 12% rise of all 15 assets Wells Fargo started. Remarkably, investors have already snuffed this out. The United States Oil Fund, a major ETF that tracks the price of oil, is up 62% in the past 12 months so far. That's a larger jump than any other ETF tracking the asset classes Wells Fargo analyzed. Be inflation smart. Best and worst asset during inflation. Palo Alto Networks is almost profitable. Its stock is too cheap, Morgan Stanley says. Palo Alto Networks shares have held up a little better than most other software stocks in the recent tech sell-off. And for good reason. In an era of digital transformation, about the last thing you want to cut from the IT spending budget is software to defend the corporate network from bad guys. But Morgan Stanley analyst Hamza Forswa asserts in a research note Thursday the Palo Alto Network's shares remain underpriced. He maintains his overweight rating and 823 target price on the stock, implying a potential 68% gain from current levels. Okay, tonight we briefly looked at some of the articles published recently. Okay, things have been really tough lately, so I wasn't able to um, do YouTube live because I've been busy and things have been going around in my life recently. But I'll try my best to do more of a YouTube live from now on, and hopefully in the future too. Uh, it's now July already, and hmm, I'm uh, I'm saying like this because I really want to do it. Hmm. My words comes out, and I want to keep it. Okay. Anyway, bye bye. Have a good night.